Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, we got some very big crypto news today. First up, State Street, the Wall Street giant, finds that institutional investors will be doubling their digital asset exposure within 3 years. Now, I think this should not come as a surprise to us because we've been seeing the institutional herd just rushing into the crypto asset class, building with the technology via tokenization, stablecoins, looking to offer crypto trading and custody. And we've been talking about, once the Clarity Act is passed, you're going to see a flood of capital and more players entering in. They're going to put all their chips on the table. Right now, they're doing a lot of trial and error, R&D, testing the waters, right? Some more so than others. I think the banks are a little bit hesitant because they need that clarity, but you have firms like BlackRock and Fidelity and others, which have launched ETFs and are tokenizing and much more. So let me give you the details here. And once again, State Street, they are a powerhouse on Wall Street. So it's important to hear their perspective and what they are thinking. So institutional investors are accelerating their shift towards blockchain and tokenization technology, with the majority expecting average exposure to digital assets to double within 3 years, according to a new research study from global custody and asset management giant State Street. The report also shows that nearly 60% of institutions plan to increase their digital asset allocations in the coming year, reflecting growing confidence that blockchain-based assets are becoming a permanent part of long-term investment strategies. The findings come from the bank's 2025 Digital Assets Outlook, which surveyed senior executives across global asset managers and owners to assess sentiment, strategy, and operational readiness regarding emerging technologies. So folks, game theory is playing out here. No one wants to get left behind. And as mentioned, once the market structure bill is passed, you're going to see all of them dive into this asset class. More capital will be coming in. They're looking to put all the TradFi assets on the blockchain to allow it to trade 24/7, enable DeFi opportunities, and create a more global market where you can bring in more liquidity and capital. So that's the game plan here, folks. And all the dominoes are falling. We are seeing the big banks from the major financial institutions, the brokerages, and much more. They are all coming. So I've often stated that I'm not only bullish on this bull market cycle, but the future ones as these banks and these companies start building through the bear market, and then we get ready for the next bull market. So very big news here and confirmation of what's happening. Now, on that note, crypto investors are now using Wall Street's age-old strategy to invest, says Bitwise's CEO. Now, I've often had Matt Hogan of Bitwise on the podcast, and Bitwise, they're a great company. They have some great crypto products and much more. So institutions no longer focus on market capitalization, but instead follow a nuanced stock market-like investing strategy in digital asset markets, according to Bitwise's Hunter Horsley. Horsley added that Bitcoin could be both a store of value and payments network, but not simultaneously. A potential Bitcoin bear market may be less severe than previous ones, Horsley said. So those were the main takeaways. But let me give you some more details here. He said that institutions, they were years ago, viewing the crypto market primarily through the Bitcoin lens. However, they have since moved to more sophisticated and reliable investment analysis methods. He says, historically, institutions viewed the crypto or the entire crypto market similar to Bitcoin, essentially digital gold, and made broader decisions based on market cap. However, they are gradually recognizing that the crypto space is more diverse, much like the stock market, with each project offering unique use cases and value propositions. So essentially saying the institutions are diversifying, right? So they're looking at different blockchain projects, they're tokenizing on different blockchains, they're looking to offer more than just Bitcoin, which makes sense, right? This market is vastly more than Bitcoin. Don't get me wrong, Bitcoin is still the number one asset, still moves the market, still has the brand, and most institutions, when they enter the space, they start with Bitcoin. But clearly they're branching out here and going to other assets and seeing that tokenization, as mentioned, stable coins, DeFi, and all these other great opportunities are there to invest and to build with. So I certainly agree with Hunter's statements here. Now, folks, this episode is brought to you by VeChain, which is one of the top layer one enterprise blockchains out there. VeChain is getting adoption from many big brands and companies around the world who are building Web3 technology. Some of the key features of the VeChain blockchain includes it's secure, affordable, scalable, fast, and sustainable. I've been a VET token holder since 2018. So I hold this token and I'm very bullish on it. Some of the brands and companies they're working with include PwC, Walmart China, Sam's Club, BMW. They are also partnered with Boston Consulting Group, and they also partner with Dana White in the UFC. And Dana White recently said that he bought over $1 million in the VET token. And VeChain recently launched staking via Stargate. So once again, I'm bullish on this project. Check it out. Go to vchain.org. Link will be in the description. Now look at this capitulation news. The UK lifts retail ban on crypto ETNs, paving the way for investments from pensions ISAs. Of course they did. They all have to bend the knee. Over the years, I've often stated that any country that bans crypto is writing their economic death sentence. So even those who are laggards and still on the fence or naysayers, they're going to be pulled into the asset class kicking and screaming. But this is the future. You know, we've talked a lot about the global markets, the economies, and the governments will all be running on blockchain rails. So the FCA has lifted its ban, letting UK retail investors buy crypto ETNs for the first time. ETNs fall under the umbrella of ETPs that also includes exchange-traded ETFs. The government confirmed that crypto ETNs can be held tax-free in ISAs and registered pensions. Major ISA providers such as IG and AJ Bell may take time to roll out access to these products. Folks, the on-ramps being opened up globally to bring in more capital into this asset class. And as we all know, there's a supply and demand economics that plays out here because not every token is in the open market. Some are locked up, some are staked. With Bitcoin, it's very hard cap. You know, it has to be mined, and some have been lost, right? People have lost their private keys, so those coins are gone. They're no longer accessible or liquid or whatever it may be. So that's why you have this kind of supply shock. And remember, this is the first truly global asset class. I know some of you are going to say, Tony, what about gold? Gold has been around for a long time. Yes, but it's been a pseudo global asset class because you can't instantly verify the supply. You can't settle real-time transactions. It's not portable, right? I can take some Bitcoin in a hardware wallet and go to any part of the world with it. I can't carry around a ton of gold bars, right? And even the gold bars that are in some of the storages and whatever it may be, you can't determine the quality of that gold, right? Is it black market gold? Is it real gold, right? So these are the things that you can't really verify. So that's why I call crypto the first truly global asset class, because if you just need a smartphone and internet, you can access it, right? While it's maybe very hard to carry around gold and all these things. I hope you understand because of the digital component and the real-time trading, the 24/7 market and much more, it is truly global versus anything we've seen historically. Now, look at this news. Coinbase and Mastercard held talks to buy stablecoin fintech BVNK for up to $2.5 billion. This is per a report from Fortune. I have never heard of BVNK, so this would really be incredible if this goes through. And I've interviewed some folks from Mastercard. I think it was the head of digital assets, and they're all in on crypto, and so is Visa and the other credit card companies. So it's not surprising that they want to partner and get things up and running. So it's incredible. So crypto exchange Coinbase and payments giant Mastercard have held advanced acquisition talks to buy BVNK, a London-based fintech that builds stablecoin payment infrastructure, according to 6 people familiar with the matter who spoke with Fortune. The discussions have not been finalized, but several of the sources told Fortune that the potential sale price is between $1.5 billion and $2.5 billion. The talks still may fall apart, yet Coinbase appears to be ahead of Mastercard at this stage, 3 of the sources told Fortune. Oh, so I think I misspoke. I mentioned that Mastercard and Coinbase were teaming up. They're not. So they're individually trying to purchase this company, but I have not heard about this stablecoin company. So this is very, very interesting. If completed, the acquisition would be the largest stablecoin related deal yet, signaling how mainstream financial and crypto firms are competing to control the next wave of digital payments. So again, we're seeing the race, right? Everybody's trying to get as much market share as possible, grab as much of the technology as possible, because this is the future. And I think once the market structure bill passes, we're going to see more of these acquisitions, M&As, and just global expansion by some of these companies. So it's incredible. And if you guys recall, just a year ago, Stripe had acquired another stablecoin startup, Bridge, for $1.1 billion. So it's incredible what's happening. It just reminds me a lot of what took place in the dot-com boom, where you had just massive companies building, and there was IPOs and mergers and acquisitions and much more incredible stuff. Now, speaking of stablecoins, Ripple to bring RLUSD stablecoin to Bahrain via a new partnership. So Ripple continues to expand the XRP ledger and its stablecoin RLUSD into different parts of the world with new use cases. So Ripple, the major blockchain company and issuer of the XRP cryptocurrency, is expanding operations in the Kingdom of Bahrain through a partnership with a local fintech ecosystem builder. Ripple on Thursday announced a strategic partnership with Bahrain Fintech Bay, a major local fintech incubator closely collaborating with government partners, including the Central Bank of Bahrain. As part of the collaboration, Ripple and BFB will work together to contribute to Bahrain's digital asset ecosystem, including running fintech pilot projects and testing solutions in areas including cross-border payments, stablecoins, tokenization, and more. So as you can imagine, if they're going to do tokenization, they're going to offer up the XRP ledger, right? There are a lot of people who, since the SEC Ripple lawsuit wrapped up, that have been building on the XRP ledger. The volume has grown. In fact, the total value of tokenized assets on the XRP ledger now sits at number 10 based on RWA.XYZ data, which tracks this on multiple blockchains. So it's not only RLUSD, but Ripple's going to push the use of the XRP ledger. So according to Ripple's Middle East Managing Director, Rhys Merrick, the company ultimately looks to offer its digital asset custody solution and Ripple RLUSD stablecoin to Bahrain's financial institutions. Huge news here, folks. So Ripple working with different central banks and governments, and they're going to have their stablecoin leverage. They're going to have the XRP leverage for tokenization and much more. All right, moving ahead, we got some news here about Solana. So Solana treasury company Sharps Technology taps Coinbase for custody, liquidity, and OTC trading support. So the firm now holds over 2 million Solana tokens in line with other Solana digital asset treasuries like Helios, DeFi Development Corp, and Upexi, but behind Forward Industries' 6.8 million holdings. Guys, we are just seeing the trend of digital asset treasury companies ramping up. As I've been stating recently, this is very good for the tokens you hold. If you hold Solana, this is great, right? They're buying a lot of the supply and holding it on their balance sheet. And that's going to create a lot of the supply and demand shock. Plus, you have the huge narratives, right? That'll be out there. This company's buying X amount of this token and so forth. And all that's going to drive more FOMO and more capital to come in. So very bullish news here. These companies, these digital asset treasury companies, are getting very creative, and they're buying a ton, man. And you guys know I've said it ad nauseum. Watch out, there's a bubble forming here. So this is why we want to take profits before this thing rolls over and there's a bear market and collapses and much more. Some of these are going to collapse, but it is what it is. This is the nature of markets, but we want to ride the wave up, sell into the euphoria and greed, and exit the market. Some of you may say, hey, look, I'm not selling, I'm just holding on. That's fine. Everybody's financial situation is different. I'm personally taking profits. I'm sure many of you are as well. And then I'll be buying the blood on the streets when the bear market rolls around, whether we have a 80% pullback or even just a 50% pullback. It doesn't matter to me. I'll just be buying the lows again and preparing for the next bull market. All right, final news item here. Digital Currency Group subsidiary Yuma launches asset management division with 2 flagship funds. So this is interesting. Many of you may know Digital Currency Group which is headed up by Barry Silbert. They've owned multiple companies like Foundry, the Bitcoin mining company, Grayscale, and much more, right? So let me give you the details. Digital currency group subsidiary Yuma, focused on scaling the decentralized AI network Bittensor, or the native token is Tao, is launching an asset management division, according to an announcement on Thursday. Yuma Asset Management will be anchored by $10 million investment from DCG, the company's investment giant. According to the announcement, the asset manager will kick off with two flagship strategies that invest in Bittensor subtokens: the Yuma Subset Composite Fund, designed for market cap weighted exposure across all live subnets, and the Yuma Large Cap Subnet Fund, focused on larger subnets. So this is interesting. They're kind of building this niche fund, these niche funds dedicated to the protocol. This could work out very well. They're going all in. And again, if you hold a token of some of these, protocols and blockchains they're investing in, that could work out really well. Now, I personally don't hold the Tau token. It's not possible to hold every token. So I picked my horses. I bought, those tokens in the bloody bear market when they were down in the dumps. And now they're up. Of course, my portfolio is up. And of course, I'm looking for higher gains and looking to exit the market for the top. But, just make sure you don't get FOMO and you do your research. And if you have the capital, you can certainly invest, but you also don't want to spread yourself too thin, right? Not everything will be a winner. But one of the things you do want to watch is who are the big VCs or hedge funds, and where are they putting their capital. So this is something to look at, especially in a bear market, right? Who's taking a position and much more. So Bittensor Network is a decentralized blockchain-based network that enables collaborative machine learning and AI model development across specialized subnets. The network rewards validators and miners in its native Tau token for contributing computational resources. So this might be something I'll look into. As always, I'll let you guys know what I take a position in and what I hold in my portfolio. Of course, those of you who are channel members, you're able to get direct access to my portfolio breakdown on Google Docs. So you got to be a channel member, right? So you can support me in that way. But guys, if you appreciate this content, please be sure to support the podcast by subscribing to my free email newsletter on Substack. I put out a write-up every week. It is, once again, 100% free, so check it out. Check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. This is a comprehensive course that teaches you everything about crypto. So check it out, folks. Thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.